So today, again, we're going to be talking about credit management. To let you know a little bit about myself, I've been working in the dynamics space since 2009. My primary focus is on finance, costing, manufacturing, and supply chain. I've also done stuff with project management, accounting, and asset management, fixed assets, and other things as well. I've had the privilege of working with over 90 customers around the world in 14 different countries. And my customer base has been quite diverse. I've done a lot of stuff in apparel and textiles and agricultural, pharmaceuticals, retail, medical devices. I do have a blog site called IntraCloud Dynamics, and I do put out a tip of the day for Dynamics finance and supply chain. So if you could subscribe, I would appreciate it. And then we can connect and start sharing some information. I'm also very active on LinkedIn, and you can find me there. So feel free to connect and follow me on LinkedIn. So what I want to talk about is the why. So when you're looking at your projects and you're doing different things, why would your client want to implement credit management? What is that one reason, or what are the reasons why you would want to do that? So the primary reason is to mitigate risk. It's all about risk. So when you're looking at credit management, as we go through these different components associated with credit management, we're going to be talking about risk. How can a client mitigate the risk to bringing on a new customer? So our business objective today, again, is to demonstrate the credit management portion of credit collection. So as you know, in D365, there's a module called Credit and Collections. We're going to be focusing on the credit management portion of that. And maybe at some future date, we'll talk about the collections piece. But today we'll be talking about credit management and how to mitigate risk. So inside of credit management, there's a number of things that allows you to do to mitigate risk. So when I talk about risk, I'm talking about if I'm a company and I'm going to bring on a new customer, I don't want to just say, okay, everyone has $1 million credit limit, right? There's certain criteria that we want to take into consideration to say, hey, I want to bring on this new customer, but what kind of credit do they have? What should their credit limits be? Do they have insurance, or do they have a parent? So there could be like a parent-child relationship. Maybe it's a customer that has lots of different companies underneath them. So you may want to say, hey, I don't want to just look at the credit limit associated with that one company. I want to look at the credit limit for the group of companies. Because again, if one company is filing bankruptcy, right, but the other companies are doing okay, well, there's still a certain level of risk associated with that. So you can actually do credit limits based upon a group of customers, which is really helpful. There's also this concept in credit management called risk scores. Risk scores we're going to get into pretty deep here in just a little bit, so I'll kind of hold on to the carrot there and tell you a bit about that in a little bit, but they're pretty cool. Along with risk scores, we have risk groups, and again, we'll get into risk groups in good detail here in a bit as well. So you do all this setup, right? You set up blocking rules, you set up group scores, you set up credit limits, and you do all these things so that you can put sales orders on hold. So that way when a customer gives you a sales order, you're like, hey, do I want to accept this sales order? Or maybe it needs to go through a special credit check. So you're doing all this configuration in the setup so that you can control what sales orders actually get processed, picked, packed, shipped, and invoiced. And we'll talk about the sales order hold process here as well. There's also, like I mentioned before, there's a whole credit collections piece, which kind of plays into the credit management, which we're not going to get into. But the whole point of it is you want to try to figure out what is collectively my risk with this customer. So all the pieces we're going to be going through today are talking about the tools needed to evaluate the risk around giving a client credit limits and allowing them to process sales orders. So there are two key things we're going to talk about today, and these are, again, wrapped around that risk piece, is risk scores and blocking rules. So I'm going to get into these in great detail. All right, so what is a risk score? So risk scores are user defined, and there's lots of different things that people measure. So on projects that I've worked on, you may want to say, hey, if a customer has only been in business for 6 months, right, they're probably pretty risky. But if they've been in business for 30 years, then maybe they're not as risky because they have built up credit, they have history. So one of the things you may want to measure when you're doing your risk score is how many years have they been in business? What's the nature of their business? Are they in gold, or are they in cotton? Or are they in, what are they in? What industry are they in? Because depending on the industry is going to have a different level of risk associated with it. You may want to say, what type of company is it? You know, is it a partnership? Is it a proprietorship? Is it, you know, what type of company is it? Because again, and these are all user defined, these are just examples. Again, it'll help you start to determine and measure like how risky this customer is. How many employees do they have? You know, that may be another thing. If they have 1 employee and they're wanting $1 million credit limit, well, that's pretty risky, right? But if they have 1,000 employees and they're a $5 billion company, well, the risk is probably less in that case. Like your Dun & Bradstreet, your DNB rating, you know. So again, these are just some examples of what risk scores could look like, or things you may want to measure when you're considering giving a client a credit limit. So we're going to go into D365 now, and we're going to show you some the scores, the customers, and some different things. So let's hop out of here. So I'm going to stop sharing the PowerPoint, and I'm going to pull up D365. Right, and the first thing we're going to talk about is the parameters table. And I'm going to take you there first, not because it's super exciting, but because there's a lot of flags there that can drastically impact how the system is going to perform. So inside of credit collections, there's this credit section, and there's this whole piece in here about credit holds. Now, some of the key ones I want to kind of point out are, let's see, this one right here, allows sales order value after the order has been released. So this one is important because if you don't set this flag, or if you do set this flag, you're going to get different behaviors when we do the sales order. So let me explain to you what this does. If this is set to no, if the sales order is released from hold and then the sales order is edited, so if you have a sales order and you edit it, it doesn't matter if the value of the sales order goes up or down, the system's going to put the sales order on hold again. All right. If it's set to yes, then if the sales order is released from a hold, the sales order edit doesn't matter. It's not going to put the sales order on hold again. So if you put a sales order in for $1, right, and it's not on credit hold, and then someone goes back and edits it and makes it, you know, $10,000. Well, if this field is set to yes, then it's going to say, wait a minute, I already checked you. I'm not going to do another credit check. So this particular field is really important. Another one I want to call out is down here. So there's one about the expiring. So this one's important. So ignore the credit limit expired when expiration date is blank. So I want to talk about that one just a little bit. So if this is set to yes, then you can leave the credit limit expiration date blank on the customer record, and the process will ignore the field. If this field is set to no, then you need to populate the credit limit expiration date on the customer record, because if you don't, the blocking rules will assume the credit limit has expired. So again, I'm kind of pulling these out because there are some things that will behave differently when you're actually going through the sales order process or putting the information on the customer record if they're not set. So be aware that they're here. Something that's a little bit more important that I wanted to talk about was down here with credit checks. So inside of D365, as you know, there's lots of posting opportunities. You can post a confirmation, you can post a picking list, you can release the warehouse, you can post a packing slip, you can post an invoice. So depending on how you have this configured will determine when the credit checks and the blocking rules are executed on the sales order. So in other words, and also you have this column here called grace days. So you have the posting flag, you have grace days, and you have this pro forma, and then you have the number of grace days. So grace days tells the system, says, hey, how many days do I need to, or can I wait before I do another credit check? So just as an example, if we have a grace day set to 10 for the confirmation, that means that once a confirmation is posted, we have 10 days to get the order picked, packed, and shipped and invoiced before the credit check will be triggered again. So as you can see here, I have confirmation and packing slip posted. Well, if I do it within 10 days, it's not going to do another credit check on that packing slip. If we don't have any grace days, then the credit check will be at each point. So the grace days are really helpful. So it's, again, something you want to pay attention to. And then one other thing here I want to point out is around the statistics. These don't mean a lot to you now, but when we get to the customer record, it'll be helpful to know that this is where you actually set the statistic values that's used on the customer record. So I'll point that out in just a bit, but just be aware that these are here. All right. The information down here under credit limits is what you typically would have in D365 prior to using this. So you have your credit limit value, of none, balance and packing slip, and balance plus all. Okay. So again, I don't want to belabor the whole parameters piece, but just be aware that it is here and it does impact how the system behaves on the customer record as well as on the sales order. All right. So now let's hop over here to customers. And I'm going to create a new customer, and we're going to call the customer D365. All right. And we're going to go through the different pieces here. Again, this is just normal setup for any customer, nothing fancy here. All right. On the customer record, there is a section for credit collections. Let's see, I have a slider bar. I don't think you can see my whole screen, and I don't know why. There's stuff over here on the right-hand side. Oh, there's a slider bar. Alrighty, there we go, perfect. So in this credit collection section, you have a field called credit rating. The credit rating is just a free text field, a user field. It doesn't do anything. You can say that it's good or bad or excellent, or it's just a descriptor. It doesn't actually do anything. You have the mandatory credit limit. Again, in the credit collections parameters form, a credit limit type is typically selected. However, if the credit limit is set to none, then you would have to set this to mandatory credit limit. Okay. If you wanted the customer to have unlimited credit, then you could do this slider. Lots of times with companies, they'll have like their golden child of sorts of customers, and they're like, hey, they have unlimited credit. Whatever they want to buy, they can buy. And that's when you would do that slider. And then you have this one here called exclude from credit management. So exclude from credit management says, I don't want this customer to be included in this credit management process. Their sales orders are not going to go on hold. I don't care about what the blocking rules are. I don't care about score groups. I don't care anything about that. So that allows you to handpick which ones you can include or exclude from the credit management process. All right, then we have the customer management group. This field allows you to group customers together and be used in a blocking rule. This credit management group is not the same as the customer credit group. So there's two different groups. There's a credit management group and there's a customer credit group. The customer management group is just a user-defined field. If I right-click here and say view details, I can set up whatever groups I want. There's no really logic to it. It's just a way of grouping customers together so that you can then create a rule around it. So we'll get into that a little bit more, not too much more, but a little bit more. And then we have the credit limit. This is a customer's credit limit. This is the same value that you had in other versions of D365 prior to them introducing credit collections in 2019 rather. And then you have this customer credit in the customer's currency. So let's just say, this is $10,000. You'll notice that I'm also using US dollars. So this is US dollars. If the customer had a different currency, say euros, then the system would look at the currency conversion table and determine what that would be and show you that in euros. All right, now there should be or could be a field on here called temporary credit limits. So you'll notice that you do not see it on the screen, and you do not see it on the screen until you've actually created a temporary credit limit. So let's talk about this for a minute. So when would you use a temporary credit limit? If you have a new customer that wants to place an order, but you haven't yet determined their true credit limit. So,
but generally speaking, he is not very जैसे कुछ लोग बहुत चालू से और ऐसे वाले generally ठीक है.
You need to mute someone. Yeah, I think you can carry.
Okay, very good, thank you. So a temporary credit limit is, let's say somebody, your sales guy calls you up and says, hey, I've got this big order, we can put it in today. And then your credit collections department is like, wait a minute, we haven't had time to check out their credit. Well, you may say, well, they just want to place an order for $5,000, right? It's very low risk, let's just let them do it. Well, inside the system, you have the ability to do temporary credit limits. Another example of when you may want to do a temporary credit limit is, let's say you have a customer, they got a big government contract, right? So they got a government contract for $10 million, and the contract's good for a year. That would be a good reason to set up a temporary credit limit for that year time period, because you don't want it to be their permanent credit limit, it's just for a given time. But again, you'll notice you don't see a field here, right? You don't see temporary credit limit. So what you do to get the field to show up and to actually use it, you go up here under credit management and you say credit limit adjustments. And then you're going to say new, which it already created a new record for me. And then we're going to say temporary credit limit, and you can give it a description if you want. You go to lines, and then here I can say that it's our D365. And we can say that it's going to be from a certain date and to a certain date. And then we can give it a new credit limit. So let's just say that this is $50,000. Oh, here's the date. So we can say from date. So we're going to say that it's from, let's just say today, and it's going to expire, the end of July. And then we're going to save this, and then we have the ability to post. And now when we go back, and when I refresh my screen here, we should have a temporary credit limit. So now you can see we have a temporary credit limit of $500,000. So the temporary credit limit is going to take precedence over our normal credit limit. You also have insurance and guarantees. You notice this is a grayed out field. Again, sometimes a customer will say, I'm going to have insurance because I'm going to have product shipped from China to somewhere else, and I'm going to get insurance on it. So what you can do is you can go up here to insurance and guarantees and say new, and you can either say it's a guarantee or insurance, right? So we're just going to say it's insurance, and we can pick our vendor. And we can say that this is an insurance policy and it's effective from this date range. And it's going to be a value of, $600,000. And here I have the option of saying, do I want this to increase my credit limit? So if I say, yeah, I want to increase my credit limit, I want to use all of it towards my credit limit. So all 600,000 will get added to my credit limit. Then I put 100 here. If I just want half of it to go there, I put 50%. All right. And you'll notice there's not a post button here. You just save it. And I'll refresh my screen. And let's see here. So let me get back in there. Insurance. Maybe it did. Let's see. So what did I do wrong? So we have our we have our from and to, we have our value, we tell it to include. Here. Let's see. So we do want it to include in our total credit limit. I'm probably leaving a flag off. But it should show up right here. Okay, I'm gonna keep going, but I did something wrong. I didn't flip a flag or something. Or maybe in my parameters table, I don't have it set as well. All right, so I'll keep going. And then we have, let's see here. So we have our credit limit expiration date. So if it's going to expire at a certain date, and again, this does come from the parameter table. Then we have our credit limit change date. So every time I change this credit limit, this date down here automatically changes. And then we have our customer credit group field that will get updated for us automatically as well. These are just user-defined fields, this last review date and next scheduled date. These are just user-defined fields so that you can say, hey, this was the last time I looked at it. This is when I need to look at it next time. You'll notice up here, I gave them a $10,000 credit limit, but let's say that they were really eligible for, you know, a $25,000 credit limit. And then you could put the currency that they're eligible in. Again, this is just used for information purposes. So this section here is just for information purposes. All right, and then you have this account status. So the account status allows you to add a status to the customer. It's only used for the blocking rules. It doesn't actually put the customer on hold. This invoice and delivery section over here on the right-hand side is what actually puts the customer on hold. Right here. But anyway, but the account status is tied to that. So if I put this on hold, you'll see that over here, this goes on hold, but this is just a default. So I could go here and have this on hold, but this could be set to no. The account status reason here is just information. So you can say why. It's just used for information purposes. If it's with a collection agency, again, this is in title held, these are just used for information purposes. This risk section here, we can create blocking rules around this. So if you want to put in like when the company was established, then you can put that here, and then we can create blocking rules around that. Same with customer sent, and notes obviously is just a note. And then this information here on the right-hand side is fields that we're used to seeing. If the customer can't process, you know, you can't put in an order for the customer, you're going to set it to all. That means you can't do anything. And then you have invoice, so the customer is blocked with posting the picking list, packing slip, and invoices and free text invoices. Payment means they can just do the payment part. Requisition, which is not used for customers, and then never means you're never going to put them on hold. So, all right, so all this stuff I think you're pretty familiar with, probably from working with a customer before, except maybe some of these credit fields. All right, now one field I do want to call out here is this contacts field, because I think it's a little bit confusing. So you have collections contact. If you want to add a contact, intuitively you would think it would come from this contact information, but just to give you an idea, see, I put a contact here, right? But when I go down to my customer contact field here, you'll notice I can't pick it. If you actually want to add a contact for the collections, you go up here under customer, and then you're going to say go to contacts and add contacts. I can just call this D365. All right. And now when I go over here, I'll be able to add that. So just kind of know that it's a little bit odd. So just be aware that is there. All right. So the next thing we want to talk about are risk scores. So up here at the top, you see risk scores. So risk scores are a great place to store key pieces of credit-related data about the customer. But risk scores can also be used to auto-generate credit limits. Even though they are not required, they come in handy, especially if you have a lot of customer records. So if you want, you can create risk scores that are based on scoring groups that you create, and you can have as many scoring groups as you want. And I can go in here, but I'm going to go into the setup here in a second, but this will give you an idea. And then for each one of these different groups, you can create scoring groups. And then over here on the right-hand side, the system will give you a scorecard, a scoring number. They're also used in blocking rules, which we'll discuss later. And since risk scores are user-defined, it's best to explain them with like an example. So we're going to create some risk scores. So let me go here. I want to go into the setup and show you those things. So we're going to go under setup, credit management, and then we have risk and we have score groups. So you can set up as many score groups again as you want. And when you set up a score group, you can set it up. Let me click new here just so you can get an idea. Whenever you set up a score group, it can either be user defined, it can be average payment days, customer sent, in business sense, the SDO, which is the days of being in a sales order. And you'll see this as 12 months and average balance 12 months. That comes from your parameters table. Remember I talked about the statistics piece just a little bit ago? That's where these 12 months come from. So if you didn't want it to be 12 months, then you would go to the parameters table and change that. Credit management group. So remember on the customer record we just saw, there was that customer credit management group. That's where that would be used. The account status and the country. So these all read from values that you've put on the customer record, except for this user-defined one. And then over here, you have a range. It can either be a range of something or it can be user-defined. So let me show you what some of those look like. So average balance. So you want to say, what is the customer's average balance over some time frame? And you can see it's set to range. So it's going to be a from and to. So if their average balance is $0 to $5,000, then their ranking score is a 0, because that means they're a fantastic paying customer, right? And then so on. So, but down here, if their average balance is $500,000 to $1 million, then their score is going to be pretty high because it means they have more risk. Same for payment days. Again, you'll notice here payment days. So the system does keep track of how many days it takes for them to pay. There's a batch job that you run associated with that. And again, you'll notice it's range, which means it's going to be a from and to. This one is set up as for country and it's user defined. So you go in here when it's user defined, you're going to add the countries. And the reason it's set to countries because this looks up the country table. And then you can assign score groups or scoring numbers associated with each country. In the United States, we use something called Dun & Bradstreet ratings, so D&B ratings, which are pretty important. It does the credit rating system and a third-party credit rating system. So here you can say, you know, if they're an A1 rating, they have a very low risk. That means they're really, really good at paying their bills. But as the scale goes down, you can see the risk score gets higher and higher. And then we have number of years in business. Again, it's a range. And then same for number of years as customers, a range. So you go through and you set up these groups and you give them ranking. Then the next thing you do is you set up a risk classification. And again, keep the big picture in mind. Why are we doing this? We're doing this so that we can start evaluating or scoring our customers. So that way we can actually run a process in the system and the system will tell us like, hey, if they have a certain score, then they can have a certain credit limit. So that's the whole gist and the reason for doing all this setup. So we can say if their score, remember we have that scoring column, if the sum of those scores when we do it on the customer record are from 0 to 29.99, then they're great. They're a low risk. You know, but if they're 30 to 59, yeah, they could be risky. If they're above 60, they're a really high risk customer. So this just gives you the ability, again, these are user defined, but it gives you the ability to go through and determine like how you want to classify or rank these different scores. And again, at this point, it's not customer dependent. It's the customer piece will come in a bit here. All right, so the next thing we need to do is now we need to go back to the customer record and we need to start scoring our customer. So I'm going to go back to our D365 customer. And if I go to risk scores, you can see the list that we created here. And of course we can go in and we can, these like average day to pay or the balance and average days, these fields, there's a batch job that you can run that will automatically update those. So that way you don't have to manually go in here and change those. If we go here and we pick, you know, Spain, we can see we have a risk score of a 4. If we pick Italy, you can see we have a risk score of a 5. If we pick Canada, it's a 0. So you can see that this value changes every time we change, you know, the country. Then we have our Dun & Bradstreet rating. Again, so the concept is, again, put it in framing and context of what's happening. I'm setting up a new customer. I've gone out and got the Dun & Bradstreet number. I've already put in the number of years they've been in business, how long they've been a customer. By the way, this how long they've been a customer and number of years in business, that's also part of that batch job. These will dynamically update based upon the dates that we have on the customer record for the years of business or customer sent. We don't have to manually go change these. Again, if I say that they've been in year business, but I can manually set them as well. So here I typed in a 1, you can see the risk score is a 10. If I say they've been in, you know, business for 50 years, then then it's 0. All right. Same as being, you know, number of years being a customer, it's going to be, the risk is going to be much higher than if they've been a customer for 5 years, that kind of thing. All right. So how do we update these risk scores? So again, some of these, as we mentioned and as we saw on the customer record, down here under credit collections, you know, we do have all this information like years in business. And then also, by the way, these are the statistics over here. I don't have any yet because we haven't actually processed anything. But, you know, this information on the statistics, you hit refresh. But as far as like the system updating the risk scores, there's a batch job you run and you can schedule it to run automatically. And so if we go under credit collections and then under periodic, there's something called update and credit management, update risk scores. And if you want to include certain records, you can. Just, you know, if we just want to include our 1, you know, the 365, or we can do all of them, or we can do a range, whatever, then it's going to go run. And it's going to go out there and reevaluate all of those the system defined fields. So we're probably not going to see anything different because I haven't processed anything. But you can see that these got zeroed out. I think I had those set to different numbers. And again, that you'll notice the risk is really high because they just became a new customer. So, but again, you would schedule this batch job or that process to run, you know, maybe once a month or whatever, or maybe even every day, because it does affect the average days to pay and so on. All right, now we have this concept of automatic credit limits. So let's talk about what that looks like. So if you wanted to, a lot of companies don't do automatic credit limits. It is an option. Again, I haven't really seen it used much, but just know that if someone asks you for that, it is something that you can do. All right, so again, under setup, credit management, risk, you have this automatic credit limits. So what automatic credit limits allows you to do is you can say if their risk score value is a 30, or excuse me, I'm sorry, I read that wrong. So the average day to pay, and I can just hit the drop down here. So you can pick any of these, right? But if you, in this example right here, we can say if the average day to pay is greater than 30, then we're going to give them, or is greater than or equal to 30, then we're going to give them a credit limit of 500,000. If it's greater than 65 days, then it's going to be 100,000. So you can see the longer it takes them to pay, the lower their credit limit is. But again, you can define these, you know, however you want. So you could say is not, is greater than, is less than, and so on. Now, once you have that set up, you can actually execute this. So to execute it, There's a job that you can run. So you go back to the customer. And there's a process in here that you can run to generate. So here we can say credit limit, we can go to lines, we can say generate, and then we can say automatic credit limits. One thing I do want to point out, there are two ways or two different workflows associated with the credit limit changes. You can actually do a workflow for the whole journal. So for everything here, you can have it go through workflow, or you can do it per line. So if you wanted, you know, so maybe certain customers belong to certain business people in your company, then you can have the workflows go to different people. But there's two different workflows that you can use for changing the credit limit. Again, I do want to talk about the fact box a little bit on this customer, just to give you some information. So on the right-hand side of your screen, you do have a fact box. You have recent activity, last invoice, invoice amount, last payment amount, you know, any kind of contact information that, again, I added the one, so we have that one. But down here for the statistics, you have the highest balance. This is the date where the customer owed you the most money, okay? Or the highest balance. This is the highest balance. And then we have, oh, I'm sorry, here, this is where I want to be. So this is the highest balance date. So this is the date where the customer owed you the most money. You have this DSO, 6 months. And again, what's that 6 months comes from the parameters table. But this is the average days sales orders outstanding. So DSO stands for days sales order outstanding. And then you have the DSO for 12 months. And we have our average payment days. This is the average number of days it takes this customer to pay their invoices. And then you have average balance. And again, it's in parentheses because it comes from the parameter table. This is the average balance for the time frame. And then you have average balance for, in this case, like 12 months as well, so that you can have two different ones. You have the credit rating. This is a user-defined field that shows the credit collections fast tab. So again, that would be your credit rating. You have the risk score, and this is from the risk score screen. You have the risk group, you have the credit limit. This is the total credit limit that shows on the credit collections fast tab. And then you have your average percent for credit limit. And this is based upon the money the customer has spent. This is the average percentage they have used for their total credit limit. And that's here. All right, then you have average percent exposure, and this is based upon the amount of money the customer has spent. This is the average percentage they have used of their credit limit. All right, so it's all just good information there. All right, so now we're going to talk about customer credit groups and how they're used. So early on, I was talking about how you could have a group of customers that share a credit limit. So I want to talk through that just a bit. So we're going to go into customer credit groups. So we're going to go here, customer credit groups. And you can have as many customer credit groups as you want, but a customer can only be in a customer group. So we're going to call this D365. And we're going to say that this customer group is 900,000. And if you want to give it an expiration date, you can. All right, and then down here, you can start adding customers. Now, one of the things you're going to notice is you can do it cross legal entities. So if you had multiple companies that were, you know, in different D365 companies, then you can include those here. So when the system's doing the credit check, it's not just looking at your legal entity, you can look across legal entities, which is really helpful. Okay. All right, and again, you can add and add and add to this list and just have the one there. But now one of the things that you may be asking yourself is like, well, what does the credit limit on the individual customer do? If I have it part of a group, does it actually look at the credit limit on the customer record? Because if you recall over here, we also have a credit limit on the customer. And the answer is yes. So it's important to understand the hierarchy of how the system looks at the credit limit. First, the system checks to see if the customer belongs to a customer credit group. If the customer is in a customer credit group, then the credit limit set up on the customer credit group is used. If the customer is in a customer group and there's enough credit in the group, so again, we had $900,000, right? So if we have $900,000 and collectively there's still money left over, like collectively all those customers, if they look at the sales order balances and stuff, there's money left. Then the system goes here and it looks at the temporary credit limit. If there's not a temporary credit limit, then it's going to look at the credit limit on the customer. So it does respect the fact that there is a credit limit on the customer record, but it only looks at the credit limit on the customer if there's enough money left over in the group. So it's something to keep in mind. It's a little bit confusing if you don't understand the hierarchy, but you guys are consultants like me, so you're used to the system. You're used to that table group all kind of concept or the hierarchy kind of concept. So the first thing it's doing is looking at the group. If there's enough money in a group, then it goes and looks at the individual customer to say how much can that customer spend. Then one other thing I just want to briefly touch on, I know we have about 15 minutes left and I want to leave some time at the end for some questions. So I mentioned this briefly, but I want to talk about it again. You'll notice that I can't, if I want to change this credit limit, I can go here and do it. But again, it's because there's a parameter for that says, am I allowed to do that or not? If I didn't have that enabled where I could manually do it, then I would have to use this adjustments. So typically, if a customer is going to use credit collections, you're not going to let them change it just willy-nilly on the screen. You want them to actually go through a journal. And to do that, they do credit limit adjustments. And you can go up here, you can say that it's a credit limit, and you can go to lines, and then you're going to give it your customer. And we're going to say the new credit limit is $15,000, right? And if I want to do an expiration date, I can. Again, I don't have to. And I'm going to save. And then if I had a workflow, I would submit to workflow. Otherwise, I can just go ahead and post. All right, and now when I refresh my screen, we should see that our credit limit is now $15,000. All right. So I'm going to skip through some stuff for sake of time. And let's go down back to our PowerPoint here just really quick and talk about blocking rules. So we've done all this work, right? We have all this work done to say, hey, what do we want the criteria to be? Well, now we have all this criteria. Now we're going to talk about blocking rules. So blocking rules allow us to use that criteria, but it also allows us to do some other things. So there are 9 blocking rules. So there's days overdue, account status, terms of payment, credit limit expired, overdue amount, sales order amount, credit limit used, rank payment terms, and rank settlement discounts. So I'm going to go into the system and show you those. How that works. So let's get back into D365. So again, you have risk scores and you have blocking rules, and that's really the important thing to know. So blocking rules. So credit collections, and then setup, and then blocking rules. So this is where you'll notice if you're counting these, there's 7 here, and I mentioned that there are 9. So there are 2 more outside of this list. But you can go through here for days overdue, and again, it is the table group all concept. You can do it for a certain customer group, risk group. You can either say it's either blocking or excluding something. You can say if it's equal to or greater than, that kind of thing, and so on. So what I want to talk about here, because I'm going to run out of time, is that again, there are 9 blocking rules, and there's a hierarchy to how the system uses this table group all along with the account group and risk group and stuff like that. I'm going to skip through a piece of that. Just know that these are here. So we have days overdue. We have our payment, terms of payment. Trying to see if there's any of these that aren't very intuitive that I want to call out. I don't have time to go through all of them, so trying to one of these that might be particularly helpful if we talk about the terms of payment. This is not necessarily what you might think. So you have payment terms, right? Like net 30, 210 net 30, that kind of thing. But there's also something called terms of payment. And I'm going to split hairs a little bit on that because I personally thought that that was a little bit confusing. Oh no, I'm sorry, I'm getting ahead of myself. It's something else a bit later, so I'll get into that in a second. Then you have credit limits expired. Now, one thing to know about the credit limit expired, this looks at the customer's credit limit expiration date and adds the grace days. If the customer credit has expired and the grace days are exceeded, the sales order will put the order on hold if it's a type of blocking. So the important thing to know here is this is important because just because a customer's credit limit has expired does not cause the order to go on hold. The setup of this rule is what makes it go on hold. So it's going to look at this customer's credit limit expiration date and it's going to add these grace days. Okay, so that's what these are, days credit limit expired. So if it's expired, it's going to allow it to go 30 days beyond that before it actually puts it on hold. So it's something to pay attention to. It's something kind of easy to miss. If a sales order doesn't go on hold, but it has expired, then you want to go here and see what the grace days are. All right, overdue amounts. This is particularly helpful. Sometimes we don't want sometimes you don't want to say, okay, if you're 100, you don't want the customer to use all of their credit limit. So if I have a credit limit of $15,000, I don't want to wait till I'm at $15,000 to put the order on hold. I may want to say, hey, when I get to $14,000, I want to put the order on hold so that someone can look at it. It doesn't mean they're not going to process the order, but it does mean that they want a human to look at it and say, yep, it's okay. So in this example, we're saying that if the overdue amount is $10,000 and it's over 80% of their credit limit has been used, then we want to go ahead and put the order on hold. So this is one that a lot of customers use. This is a really nice one to use. All right, and then we have sales order. This looks like the sales order amounts. The first rule that it looks at, now this one is important, so I want to get into this exclusion. You see this exclusion down here? I want to talk about this a bit. All right, so the first rule that is looked at is it looks for all, and it looks for exclusion, and it looks for this release sales order. This combination is unique. So whenever you're putting in a sales order, if your sales order meets this criteria, then this becomes like the golden rule. So that way, if it meets this criteria, it's not going to look at any other blocking rules. It's going to say, hey, it met this criteria. In other words, I have a sales order under $1,000. I don't care what their credit limit is. I'm going to let it go through. This becomes like the golden rule. So you do want to make sure that this combination right here of all, exclusion, and this release sales order combination is the first rule that's going to be looked at. All right, and then we have this credit limit used. And again, this is saying if they've used 90% of their credit limit, put them on hold to be looked at. All right, and then rule number 8 down here is we have rank payment terms. This is the one I was wanting to call out because again, I thought this was a little bit different. So you can go in and actually put, these are your terms of payment right here, and then you can rank them. So if someone's paying in cash, the risk is really low, right? If someone is paying net 30, it's a 1. If it's net 45, it's a 2, and so on. So that becomes particularly helpful. But here's where the rule part of it comes in. So the rank payment terms, if the user changes the payment terms on the sales order, the hold process looks to see what the new payment term is ranked. So if I'm on a sales order and normally they're set to cash, right? But on that particular sales order, I said it's net 30. Well, guess what? That's going to trigger a credit hold because it's saying, hey, you went from a rank of 0 to a rank of 2. No, you can't do that. Now, if I were to go from cash to COD, they have the same rank, then it's not going to throw it on hold. but if I skip this rank, change rank numbers, the system's going to put that sales order on hold. All right, and then the last rule, or the last blocking rule, is this rank settlement discounts. So the same thing is true. If I'm on a sales order and I have, again, they're going to have to pay net 0.05 within 10 days, it's a 1. But if I were to go down here and do 1%, if they pay in 7 days, it's a 2. Then on that particular sales order, it's going to throw it to be on hold. Okay. And so how does this impact the sales order? So this is what we've all been waiting for, right? We do all this work so that we can get to the point of doing the sales order. So we're going to create a sales order. And just to show you how this works. So we have our new customer, right? And let's go down here and let's pick a service item so we don't have to worry about inventory. All right, and let's just say that the unit price, we're going to make it really big just so it throws it on credit hold, right? Okay. So now when I go over here and I go to sales order and I do the confirmation, and again, remember, it's going back to the parameter table and it's saying, when am I supposed to check credit? And I had a flag on the confirmation. So what this is going to do is it's going to show us up here at the top, you can already see it stopped it. So if we say manage here, we can see the order has been sent to credit management. All right. So what does that mean? On the sales order, if we go up here into credit management, we can say credit management hold list, and we can see that it's on hold. If we go up here to blocking reasons, we can see why it went on hold. I have the ability now to release it if I want to. By the way, there's this with posting and without. I want to explain that. So if we just said, manager decided with posting, if this is with posting or without posting. So if it's with posting, the system keeps track and says, what put it on hold? Well, it was the confirmation. So if I say with posting, the system will automatically post the confirmation whenever I release it. If this says without posting, then it's going to release the order, but it will not post the confirmation. Okay, and same would be true if I was doing a credit check, a packing slip, or one of those other steps. The other thing to know is on the customer record, on the header. So if we go to header, there is a credit piece here. Again, we can see that it's on a hold list and who released it and some different things here. The other place to see it is under credit and collections. If we go under credit management list, we can see all credit holds, which would include open and closed. We can see open, we can see closed, and we can see the ones that are due for review. So if we go to our open credit holds, we'll see our order there. See it's here, and if I want to release it, I could say, manager with posting and release, and okay. And the system does keep track of your query. So however you were trying to do that post for this packing slip or whatever, then it knows that query setting. So whenever you do the post, then it would post with that. You don't have to worry about resetting the query. So let's go back into our sales orders. And it's D365, I think right there. And we'll notice now when we go up here to credit management hold list, we can see that it's no longer on hold. Okay. All right. So we go back over here to our demo. So this is it. We have about 4 minutes left, which I was hoping to have more than that, but there's a lot to cover in a short amount of time. So is there anything that you have questions about, or do you guys have anything you would like to ask?
I think this was a great session. Alicia, thanks for demonstrating all the functionalities what we have. And this has been really an insightful session. Yes, I will leave this to the audience. I think Ranjit has raised his hand.
Yes.
Hi Ramit, hi Alicia, very nice session. Thanks for doing that. Appreciate that it's a wide topic, so we can't cover everything in detail. Just a question around notifications. So is there a setup or capability where we can send notifications to customers if they have been put on hold? I'm just curious to know.
Yeah, no, it's a good question. No, there's nothing it's all internal. So at this point, there's nothing that actually sends something to the customer to say, hey, your order was put on hold. The internal process the holds are just internal. I'm sure you could probably do a modification pretty easily for that because the system knows the customer's invoice or their email address, and they have all that criteria. But out of the box, I'm not aware of any way to notify the customer that it's on hold.
Yeah. Thank you. Just one more business scenario, just throwing out in case you have any thoughts around it. So is there a capability where we can take the credit limit off based on the quantity which we are not able to deliver? So an example is a customer places an order for, let's say, $50,000 worth of goods, and we promise to deliver it in 10 days. But let's say because of supply chain issues, we can't deliver it for 30 days. So now the customer credit limit is blocked, and they can't order other goods which are available in stock. So is there any such capability where we can release that credit limit if we are not able to fulfill the order? Just throwing out the question, we face that scenario. Yeah.
No, it's a good question. That you'd have to create another order. So what you would want to do is reduce the quantity on that one order and create another sales order for the balance. So that way you could just decide which orders you wanted to release.
Yeah.
There's not a way to discriminate because the sales order hold is at the header of the sales order. It's not at the line level. It's at the header level of the sales order. So you'd have to create a separate sales order to do that.
Yeah. No, that's correct. We are managing it manually as well. Yeah. But yeah, thanks for confirming that. Thank you, Alicia. I appreciate it. Yeah.
My pleasure.
Alicia, I have one question that I also face a similar question in one of my solutioning. That is there any data entity where I can upload or anyone can upload multiple credit adjustment in one go for all the customers?
What for the adjustment, the credit limit adjustments? Is that what you're asking?
Yeah, I have a scenario that just say suppose a company wants to input all the credit limit adjustment for in one go. When they have 1,000 customers, so they want to have 1,000 customer adjustment in one go. Is there any data entity we have?
It's a good question. I've not personally done that. Have you tried the Excel add-in? Have you tried to import? I've not personally imported into that table, and I don't know if there's a data entity for that. But it seems like that you should be able to, but I haven't personally done that. It's a good question. It'd be worth looking into. Now you've got me curious. It's a good question.
Okay. Is there any question from anyone? Otherwise, we are on time.
I have one question here, Alicia. This is Rakesh here. So first of all, thank you very much for your time, and it was a really lovely session. If someone wants to understand what is credit management, the whole picture of right from parameters, setups, and end-to-end process. Would you like to touch base on the standard reporting capability around what product offers if someone wants to just go through and just tie the knot of end-to-end process along with the reports inside of it as well?
Yeah, so there's not any reports per se. There's those inquiry screens that show you like what's on hold, so you have the all, which shows you everything that's either open and closed, or just the open or just the closed, or the ones that are need to go through review. So, and again, those can go through workflows. I didn't point that out, but when you release a sales order from hold, it can actually go through a workflow. So there are 3 workflows in the system. But as far as like reports go, I'm not aware of any reports around it per se. You would just go query off of those, that view screen that shows you the stuff that's on hold or has been released from hold.
Understood. Thank you.
Yeah. All right, very good. I did blog about this. I did like a 11 series blog about a month ago, and that's where Ramit reached out. I do have the entire documents. If you're interested in that, I could be happy to share that out. But it literally goes from top to bottom. in here because I didn't have time to cover everything today. I was trying to hit the highlights, but because one of the key things in DT365 is the hierarchies, right? So when you're doing a sales order and you're looking at all these 9 different blocking rules and you're like, oh, which one does it look at first? Like, how does it know, right? So I've documented that in this document, and I also blogged about it. So if you happen to have seen that blog, it's in there as well. But that's the information for me that I find really helpful because it's the logic. It's like, how does it know what to do next? Because you'll have a customer that'll be like, oh, well, why didn't the sales order go on hold? Well, and you're sitting there scratching your head going, gee, I don't know, right? So you have to go back through the logic. And if you know what the logic is, it's really easy to kind of pinpoint that and determine why it went on hold or why it didn't go on hold.
Great. Yeah, I also wanted to tell that to everyone that Alicia wrote around 11 blog series on credit management. So when we will be publishing the recording, we will also be publishing the blog series so that you can take a look and take a reference on those blogs. Okay. So if that is no questions, then we can wrap up. But I would like to appreciate Alicia for preparing so well that she could able to explain these things very well. So thanks so much,
My pleasure.
Alicia, and everyone especially for joining this session. Okay, so yeah, it has been a good session.
Thank you so
good
much.
evening, yeah. Good morning in the US. Yeah.
Thank you so much.
Thank you everyone.
It was a great session. Yeah.
Thank you. It was my pleasure. And if you do have any questions, feel free to
Yeah,
reach
thank
out. I'm happy to help any way I can.
Thank you, Ramit. Thank you, Alicia. Thanks.
Thanks, Alicia.
Thank
Have
you
a
so
great
much.
day.
You too. Take care. Thank you. Bye-bye.
Thanks.